Welcome again on our part 2 of the video. We are continuing with our notes to the balance sheet. We have already done the note 1, which is the PPE note, property, plant and equity note, and then we are already done with our trade and other receivables. Now we are going to be focusing on our cash and cash equivalents, trade and other payables, and our capital note. We are going to finalize it at the end. So let's move to our cash and cash equivalents. Looking at our information, we don't have any information regarding the bank, so we are going to take the balance at the end of the year from our trial balance. For bank, we are going to take the 20,300 recorded under our cash and cash equivalents. We are going to say bank. This is bank at the end of the year. Cash and cash, it's 20,000. Let me double check it. It's 20,300 rands. 20,300 rands. And then we all know that under our cash and cash equivalents, we record our cash and it's bank, petty cash, cash float. Yeah, it's bank, petty cash and cash float. So on our information number 3, we have petty cash that amounts to 950 rands. So we are going to take the 950 rands. 950 rands is for petty cash. 950. So we are going to say petty cash. We don't have anything regarding the cash and cash equivalents. We are just going to totalize it. We are going to say equals to this plus this here, which is then giving us our 21,250. This is our cash and cash equivalents. So moving forward to our trade and other payables. Trade and other payables, we are looking at our creditors, which is creditors control, which is now trade payables control. We are also looking at our accrued expenses. Before, we were also looking for our income received in advance. Now our income received in advance is no longer recorded on our payables note. It's now recorded under our current liabilities as income received in advance. So looking at our information, we only have our creditors, which is this amount. We have the creditors amount, which is the 2,400. We are going to record it under our trade and other payables as our trade payables control. It's 32,400. 32,400. By the look of things, we don't have any accrued expenses or anything regarding our creditors. As you can see, this is for drawings. We have already dealt with number 5, and then this number 6, it says repairs for 1,880 were not paid. This is, oh yes, these repairs and water and electricity of 1,500 were not paid. So this is our accrued expenses. Forgive me for not seeing this last information. Repairs for 1,880 were not paid, and then water and electricity for 1,500 were not paid. So this is our accrued expenses, which is going to go under our trade and other payables. So what is accrued expenses? Accrued expenses, this is our expenses that were not paid, or that were paid for less than 12 months, or that were not paid during the year. It depends on which month we didn't pay for these expenses, which is our accrued expenses. So it's for repairs, it's going to be 1880. Let me double check. 1880. And then for water and electricity, for water and electricity, it's going to be our, let me double check again. For our water and electricity, it's going to be 1,500 rands. It's 1,500 rands. So again, by the look of things, I think we are done with our trade and other payables note, and on our information we are done with everything except for our drawings. Except for our drawings, which is then going to be recorded on our capital note. So we are going to totalize everything under our trade and other payables. We are going to see 1,180 plus 1,500 rands plus 1,500 rands. It's then giving us 3,380. We also have to say 32,400 plus 3,380. It's giving us our 35,780. So this is the amount to be recorded on our balance sheet. Also here, this is the amount to be recorded on our balance sheet. And then going to our capital account, we all know that we start with our balance at the beginning of the year. Following the balance, it's our net profit. And then following the net profit, it's our drawings. And then contributions, if there are any additional contribution to our capital. So our balance at the end of the year is going to be recorded on this column, our balance at the end of the year. So here's what we are going to do. We are going to take everything to our balance sheet so that we can balance everything correctly on our capital note. So our capital note, we are going to have drawings, as we saw here. The amount drawn by the owner total to 46,200. We are going to take it as it is. Drawings, it's 46,200. It's a negative amount, 46,200. It's 46,200. And then net profit, we are going to calculate how much is the net profit. And then our balance at the beginning of the year, we always take the capital amount that we are given on our trial balance. We use it as our balance at the beginning of the year, because we are going to calculate the balance at the end of the year using our balance sheet. So we are going to say, looking at our balance sheet, we are going to record everything regarding our balance sheet, and then this capital amount is going to be our balancing figure, then which makes it, when we make it our balancing figure, meaning that we are going to get the balance at the end of the year. So the capital amount on our information is going to be our balance at the beginning of the year, which is 384,950. 384,950. So the net profit is going to be our balancing, it is also going to be our balancing figure, because the main purpose of us doing this balance sheet is to calculate the net profit of the business. So we are going to take the capital balance, which is 384,950. 384,950. So now what we are going to do, we are going to just take our balances and then record them on our balance sheet. So we, under our non-current assets, let me just do this balance sheet. Under our non-current assets, we have our PPE, which is property, plant and equipment, which is our physical assets. Our assets are as follows. It's going to be equals to this amount. It's going to be this amount, as I've said before, 502,500. And then we also have financial assets. What are our financial assets? Our financial assets, these are non-physical assets. These are our investments. So looking at our information, we have fixed deposit. So fixed deposit is an investment. We as a business invested this amount, 35,600, to Western Bank. So we are going to take this amount as it is recorded on our balance sheet, 35,600. 35,600. In actual fact, this amount should be recorded here on this column. Let me just do this quickly. 35,600. And then on this column, I'm just going to say 502,500. 502,500. So adding these together, we have to get our non-current assets. We are going to say 502,500 plus our 35,600, which is then giving us 538,100. Moving along, we are going to go to our current assets. You all know under our current assets, we start with our inventory. So we should have opened a note for inventory. So I didn't see any need to open a note for inventory because we don't have anything regarding inventory. We don't have any consumable stores. Our consumable stores, we are talking about our stationery, etc. So we are going to take this balance, which is the inventory that we have at the end of the year. It's going to be 46,200. We are going to take it as it is recorded under our current assets. It's 46,300. Let me double check again. 46,200, not 300. 200. 46,200. 46,200. And then we record trade and other receivables. Our trade, we have already done the trade and other receivables note. We just have to take the total amount. I'm just going to put an equal sign here. We just have to take the total amount, which is the 81,350 recorded on our trade and other receivables. And then next, we should, as I've said, this prepaid expense was usually recorded under our trade and other receivables. Now, because of the new syllabus, the prepaid expense is now recorded straight under our current assets. So on this activity, we don't have any other prepaid expense. What is a prepaid expense? This is the expenses that we paid in advance or for more than 12 months. So we take the amount that is outside of our financial period, we record it under prepaid expenses. So by the look of things, we don't have any other prepaid expenses. So we are going to put a 0 there. Then we move forward. We are going to have our cash and cash equivalents. Cash and cash equivalents. Cash and cash equivalents. Under our cash and cash, let me fix this, cash and cash equivalents. We all know again that we should take that total amount we have already did. We are done with our note. Cash and cash equivalents, which is 21,250. 21,250. We are done with our current assets. What's left for us is just to totalize everything. Okay, let's just say 46,200 plus 81,350 plus the 0 plus 21,250, which is then going to give us 148,000. Okay, 148,000. So we all know total assets is always equals to current assets plus non-current assets. So we are going to see our non-current assets plus our current assets, which is giving us 686,900 rands. So equity and liabilities. So under our equity, we are going to skip this part and then we are going to come back to it as we finish our balance sheet. So as I've said before, this is going to be our balancing figure. So we are going to continue to our non-current liabilities. Non-current liabilities, we are looking at our loan or mortgage bond. This is our non-current liabilities, which is going to be our 95,000 rands. 95,000 rands. We are going to see mortgage bond. It's 95,000 rands. 95,000. Our non-current liabilities is also 95,000 rands. So let me double check the amount. Yes, it is 95,000 rand. So we are done with our non-current liabilities. We are going to go to our current liabilities, which we know that we are going to record our note here, which is trade and other payables. We all know that we have already dealt with our trade and other payables, which is this amount, 35,780. 35,780. We are done because we don't have any income received in advance. As I've said, we should have income received in advance. So because on this activity we don't have any income received in advance, it's just going to be the 0 there. So if we had bank as a credit balance, we were going to have our bank overdraft here. We were not going to have bank under cash and cash equivalents. So we are done. We just have to totalize everything. This plus this, it's giving us the 35,708. So as we all know that total assets are always equal to total equity and liabilities, As I've said, this capital amount is going to be a balancing figure. We are going to take this amount, put it right here, which is going to be 686,900 rands, and then we are going to balance this. We are going to say 686,900 rands minus 35,780 minus 95,000 rands, which is giving us 556,120. So meaning that our capital is equal to 556,120. So we are going to take this amount, record it under our capital note, As I've said, that the balance at the end of the year is going to be recorded here. So we are going to take this amount and say equal to the 556,120, which is then going to be recorded here. So we have everything on our capital note. So now we can calculate our capital net profit amount, which is going to be our balancing figure. We are going to say balance at the end of the year minus the 384,950 plus the 46,200, because it's a negative amount. So our net profit at the end of the year is 124,970. It's 124,970 rands. So we are done with our activity or question 4.2. We are done with our balance sheet. We are done with our notes to the balance sheet. So if you have reached this point of the video, thank you for watching. Please don't forget to subscribe, like, share and comment. Thank you. We will meet on our next video. Thank you very much. Goodbye.